You're watching The Real Deal, and our focus is on the disruptive future of home interior design, or in fact, why just home interiors, interior design market. Traditionally a business which has been monopolized by architects and interior designers. Now there are tech startups which are changing the way business is done. What has been a costly, time-intensive process is now being made available on demand by these new platforms. Manit Rastogi, you heard all the experts. Now, I actually looked at one of the CII reports and saw the number of architecture firms in India who have a turnover of over 2.5 crore. And there aren't too many of those as well in India, right? And now you have $100 million plus sort of investments which are raised by the likes of LiveSpace. Profitability, is that something that you worry about for them?
So these firms that you're referring to in that report are essentially only consulting fees. These are not turnkey.
Okay.
And this investment more aims at the turnkey end-to-end service providers. So coming back to the earlier point, are these tech companies disrupting designers? Answer is no. But are they disrupting the local manufacturers, the local carpenters, the local, the Kirti Nagars of the world, and the local sort of design market? Yes. Mm-hmm. And that's where the challenge will really lie. Now, the second challenge, in my opinion, will lie as to why are there 60,000 designers in India, and by any given rate we're producing 20,000 more every year. Is simply because
even LiveSpace has been able to aggregate about 2,200 experts, which I'm assuming are designers.
Are designers.
So there's still a huge number out there which is not aggregated. Most
of these people will essentially, yes, there are a lot out there who are not aggregated. There are a lot out there. So if you look at the typical designer workforce, we lose about close to 70% of our workforce because women step out of the formal workforce in design or design companies by the time they're hitting motherhood or getting married. And platforms like this will give them a great opportunity to remain engaged with the workforce in the gig economy, to continue to work and design for the rest of their life. So it's a great platform in that sense.
But you don't consider this business as a threat to your core business?
Oh, absolutely not. Absolutely
None at all?
Not. None at all,
okay.
whatsoever. I see it as a very synergistic, and the more we get in this space where actually the contractability, the ability to put something together well, is taken care of by someone else, by technology, then design gets a free hand.
Okay, Mr. Almeida, just very quick question. Cookie cutter sort of houses that you would probably, with minor changes that you would provide to your interior buyers, how big, I mean, don't you think people will get bored of that after a point in time? Is there an innovation strategy which I don't know of?
Each and every home which is designed and delivered by us is customized to the last bit of it, and it is unique. We don't confine with a certain catalog, or we don't confine a certain design which fits for all, and we push our libraries to them. We actually talk to the customers, and we actually uniquely design each and every bit of homes to them. Fine, we have a library which is created for us to choose what best suits their home. Which okay. Largely it is driven by
let me ask you, sir, if you're saying you're customizing, let me ask you then, what is the kind of investment that a company like Puravankara is ready to commit to Purva Streaks, and when do you think this business turns positive for you? Or is it already positive from day one?
It is positive for me, one, I would say that. Second thing is, the scalability is what we are working out today. So we want to scale this business to the next level possible by investing on technology. There are various platforms where we can invest in terms of technology, in terms of enhancing the design experience, the delivery experience to the customers. And we would want to have the cycle time from a design concept to a delivery in a very short span. Our challenge here is, in case I say 45 days for a home delivered with the design, I would want to advance it. I would want to make it 40 days. I would want to make it a little earlier then. So the customers are free to actually take a choice of when they want to actually move into their homes.
Give me some numbers in terms of what kind of turnover are you aiming at in let's say by 2022, because that's the benchmark we're using.
See, I would rather be slightly conservative on this, if you ask me frankly, but we would want to reach a turnover as close to about 300 crores to us in 2023.
Okay. Let me then toss the next question to Anuj Srivastav. Anuj, what is the turnover right now of LiveSpace, and what's the cash burn?
Yeah, I can tell you, so our projections for the year end, which is March of 2019 would be in the range of about, at the run rate level. So you multiply the monthly number by 12, would be about $120 to $125 million. So if the dollar stops appreciating, it would be in the range of about, I'd say about 800 to 850 crores. So we'll be just shy of reaching 1,000 crore turnover in a very short span of 3 years since we sort of started commercializing the business in Bangalore.
Mm-hmm. And on the bottom line front, is there? I know that you're expanding, so I shouldn't be talking about the bottom line, but what's the game plan, end game plan here?
Correct. Well, the good news is that at the end of the day, interior design and contracting businesses the world over are profitable, right? So there's no reason to assume that a large aggregator like us wouldn't be. The question is, which of the two outcomes are you actually seeking? We're aiming to provide the best possible customer experience. You're trying to grow the company rapidly. We're actually literally market makers. So you're making a lot of new segments. You're bringing the kind of vitality and the services that we bring to a whole host of new customers which traditionally weren't able to experience this thing. So the choice is, whether you want to be a profitable company tomorrow or you want to be a profitable company at some point in time and be able to kind of grow into that outcome.
Just to understand, if TPG Global has come in, there must be an end goal here. Are you going to look at a listing sometime in the future? Vertical listings or vertical e-commerce players like Naukri have been rare. Or are you actually looking at being bought out by one of the biggies globally?
No, I think inherently what we are creating is a very high gross margin type experience, and so they are very inherently attractive unit economics in the business. So you have the potential to actually, through the aggregation of the supply chain, make a lot of margin in the business. There is absolutely no aggregator brand in the market, so we could be our own brand, which actually allows us to create a more inelastic experience and build even more margin. So yes, you're absolutely right in that. Can LiveSpace at one point in time go public? Absolutely. And I think these are the kind of companies that can go public. I don't think I'll speculate today on what the possible outcome could be, but we are squarely focused on building a phenomenal company that hopefully one day can deliver very meaningful returns for all our investors, and aim to be doing what we do not only in India but potentially any market that presents the same kind of asymmetry in the business, wherein we can use a vertical approach and bring superior experience to the customer. So no listing in sight within the next 18 months, but I'd still argue that these are the class of companies and platforms that have the potential to actually create significant amount of value.
I would love to. I would love to see something. Some sort of, at least not those kind of hefty valuations, because US market is a very different ball game, and like you said, they're more a listing place and a content platform, house.com. But it would be great to see one of you actually scale that and make or just bring in a very, very valuable Indian company. Anil Kumar, my final question is to you. There is, of course, this entire ecosystem of Pepperfry and Urban Ladder, which are also valuable companies in their own way. They're now getting nipped by somebody like an IKEA, which is at their heels. But look at the entire home decor space. Which one do you think will be more valuable tomorrow? Will it be the products company, or will it be somebody like a LiveSpace or a HomeLane? I'm asking you to take a calculated bet.
That's a difficult question. But on a serious note, I think the way market is panning out, I would anyway put my money on a platform like LiveSpace or HomeLane because see, that's a platform which is trying to solve a problem in a much more aggregated manner rather than solving just a piece of it where Urban Ladder and Pepperfry is able to provide just the furnitures, and on the top of it they are trying to sort of provide the designs, whereas LiveSpace or HomeLane kind of aggregators have a complete ecosystem covered, whether it is the designers or it is the production companies. And so by the virtue of that, one of the biggest problems which these companies are able to solve is have a predictable design, have a predictable cost, and have predictable timelines, which are the three most important consideration set which a customer look for, which can be solved by a platform, but which cannot be solved by a individual player like a furniture company.
Very quick question. House actually sent us a report and said that, even now, a predominant part of this business is a cash business. Manit, how do you scale that challenge?
So, when you came to those earlier numbers of those CII report, and this entire business, and I will say this very openly, is extreme. So, is based around kickbacks, right? And there's a very strong ecosystem on the cash business, which goes from manufacturers, vendors, designers, and at the end of the day, it is the end user who's paying for it.
Okay.
This system it's not that this is only Indian, so we can't take the sole credit of being the, of corruption, but globally, this is referred to as a referral fee. So if a designer recommends something, they're officially allowed, say in Europe, to get a referral fee from a manufacturer. What tech platforms like this will do is it'll completely spin that on its head. Because that whole system becomes totally transparent. And
you think India market is ready for that transparency? I mean, I know the demonetization happened, so you had a cash dryer, but we all know it's back in the market.
Absolutely.
And when you get a report saying that 88% homeowners paid in cash for home renovations which were done in India, you're wondering that could that be the showstopper for a live space or a home?
The real question is that if you look at all these companies, they're predominantly targeting tier 1 and max some of the tier 2. The age and the demographic that they're targeting are people who are in service. And most of these people are earning checks, paying their salaries in TDSs.
So you don't think that will be a deal breaker?
No, the cash economy will continue, but that is held by a completely different set of people who are they're not really the target segment.
All right, I'm going to conclude on that note. Anuj Srivastav, Anil Kumar, Mr. Alameda, and Manit Rastogi. Gentlemen, thank you very much for joining me. So it's traditional barriers which are getting broken, high cost, lengthy time to do up one's interiors is going to be a thing of the past. We are waiting to see one big company in this space emerge as the, talked about or as much talked about as houses in the international markets. And of course, with LiveSpace going international, maybe they're the ones to watch out for. Thank you so much for joining me.